Hey, it's Mike Watson with Keller Williams here in Palmdale with your Antelope Valley real estate market update for March 2023. The spring market is here in what I'm assuming will be all of its strength. The market has ticked up a little bit. The stats are up for what they have been. However, they are still a little bit lower than what they have been in the years prior. But let's jump in. So the number of homes to come on the market in March was 447. That's a 56% increase compared to February, but it's still almost a third lower than it was last March. So again, it was a significant increase versus prior months. However, versus last year, still down a significant portion. So our overall inventory levels are still really low, and buyer demand, as you'll see in a moment, is still doing pretty well. So the market is remaining stable, at least for now. The number of homes to go into escrow in March was 409. That was up 27%, but was down nearly a quarter compared to last year. So again, that shows our demand and the number of buyers purchasing homes. It's up for what it's been, but it's still much lower than it was last year. The number of homes to have sold in March was 349. That was up over 50% compared to February and is down 27% compared to last year. So far, year to date, the number of homes to have sold year to date versus last year, we're down about 38%. So the market is moving, it's just moving much slower than it was before. The average selling price was $467,000 and change. That was up 4% compared to last month. It was only down 3% compared to this time last year, which is amazing in itself that it only is down that much. This next slide will tell you why I think that. So for March, the average monthly payment was almost $3,600. That is up almost 6% versus the month before, and it's up 17% versus last year. So last March, the average selling price was like $480 compared to this March at $467. The interest rate for this March, the average was 6.54. Last year, it was just over 4. And so the monthly payment is up about $500 year over year. And that's why I'm surprised that the average selling price is only down about 3%. The average days on market, you can see we came down a little bit, just over 4% versus last month, but we've more than doubled versus last year. So last March is when interest rates first started going up. We went from 3% to 4% in a day, and then it kept climbing. So we'll see, I'm guessing we'll see this stat not be so drastic in the year over year numbers moving forward, but that's right when interest rates went up last year. Our month's worth of inventory, so going back to what I said with the number of homes coming on the market versus the number going off, going into escrow, we're at 2 months. That's down 11% versus last month. It's up 46% versus last year. However, 46% of 2 is not a huge change. So the percentages get a little different when we're talking about small numbers like this. Again, I say this every month, a balanced market is about 6 months worth of inventory. That means it doesn't favor the buyer, doesn't favor the seller. Right now, we're still well below, we're at 2. So we are still in a seller's market, and that's because we don't have enough homes for sale, and that has kept our market very stable as far as values go. That's all I have for you now. If you have any questions, feel free to reach out, and I will talk to you soon. Have a great day.